Hi, and welcome to the Trading Pit, personal investing tools and techniques for the active trader and investor. I am Lundy Hill. You could call me a lifetime veteran of the commodities market. I made my first trade before I could legally drive a car. Here are the charts that caught my attention from this last week's markets. First, this is not financial advice. You can lose money trading. This is a weekly review for the week ending Friday, May 23rd, 2025. First, let's talk about gold and a little bit of the other metals. Last week, I highlighted the clear out bar off of the prior pivot lows in gold. Here's the daily chart. Note that this reaction was right at the Fibonacci 38% point. This is a key level for a bullish market. I liked the wide range bar of 2 Fridays ago, and I thought that would propel prices higher. Well, this past week, gold rallied over $150, so that call was exactly right. Gold had its highest weekly close last week ever. Price broke out of this reaction channel that I've highlighted in green. A test of the $3,500 highs, I think, is definitely in the works. A wave target off of the May lows puts a price target of $4,000 in the next few months for gold. That's $4,000 per ounce. That is not shown in the chart. In other metals, platinum was up almost 10% last week, and copper was up over 5% last week. So metals are getting a lot of action. And of course, silver is not doing much. I think it is basing. And some pundits I listen to say if silver can sustain a move over $35 an ounce, that the move to new all-time highs should be forthcoming. Next, let's go to Bitcoin. Here's the Bitcoin 4-hour chart. Last week we noticed that Bitcoin had its highest weekly close ever. So both gold and Bitcoin had their highest weekly close ever. What does that tell us? After peaking at new all-time highs around $112,000 per Bitcoin, price reacted a bit. This reaction took the form of an ABC downward action in this 4-hour chart. Note that prices carried down to the 50% level. This is a little weaker than the gold reaction down to only 38%. From here, it quickly found buyers, and note that the C leg did not extend much past the A leg low. That's bullish. Prices this week broke the downtrend line, which signals a test of those all-time highs at 112 is in order. I have a wave target of $116,000 very quickly by the end of the month from these current levels. And right now on this 4-hour chart, price is forming a dynamite triangle. That's a great pattern. Next, let's go to the biggest drug in the world, coffee. Earlier this year, I noted that the dynamite triangle formed in late 2024, if it had a breakout up, would carry prices up to that 430 target I highlighted. The breakout in January did carry prices up. Prices reached $4.29, 429.95. I'm going to say that's close enough to my 430 target. So that's going to be a big win for us. Since the top, prices had another ABC reaction down, right back to the breakout zone. Notice that a lot of markets, after rallies, have an ABC down. That's a 3-wave down counter trend move down, where they can bottom. But here, price reacted all the way back to the breakout point. I don't like the fact that it retraced its entirety of its up move for the year. That's not very bullish in my opinion. At C, price had a dramatic spring low. Note the tail on the bottom of that daily bar, or the weekly bar chart there. And now afterwards it tested the highs and failed and pulled right back down. Price is now in the buy zone, and last week was what I call an indecision bar. It's a narrow range, narrow body bar. It's got a tail above and below, so you had buyers and sellers. Is it a buy? We don't know for sure, but as my father would say, it might be worth a nibble. I do not like the depth of the reaction at C. I also don't like last week's wide range selling bar. A break below C at 325 would be dramatic and signal much lower prices coming in coffee. Next, let's go to wheat. Here is the weekly wheat chart. It has been in a congestion for a year, but summer is here. Time for the summer grain rally. If you check the charts for April, May, and June every year, you notice that frequently that's when the summer rally begins. Wheat is in the buy zone. It's in the lowest 25% of the range for the last 2 years. So, well, the last year and a half at least, as shown in this chart. So the risk in buying is lower than the risk in selling a breakout. So the buying risk is below the low of last week. Actually, that would be 2 weeks ago, since these are weekly bars and it's Monday. An initial target is the low of the high bar that it made earlier this year at around $6 per bushel. If that breaks to the upside, then I think a move to last summer's high range around $7 is in order. And finally, let's catch back up with cocoa. Cocoa was a huge mover 2 weeks ago, breaking out of congestion decisively. After bouncing off a multi-channel low at 7,600, we see in April, in early April and again in late April, prices stalled around 9. 2 weeks ago, cocoa had the rally above $11,000. That was a 22% rally. I highlighted in last week's video that I thought cocoa was in no man's land. It's right in the center of a multi-year channel, which I highlighted last week. You can watch last week's video to get the channel. I thought a multi-day reaction down to Thursday's close or close to it was in order. And this was based off of 2 Thursdays ago action. You note the tail 6 bars ago. Let's go back. A lot of sellers came in. That was preliminary indication of weakness. If the 9,600 can hold, and I think it'll take a few days of buying and selling at these levels to absorb all the sellers, but if 9,600 can hold, I think prices could rally to my long-term target of 14,000. But I won't hold my breath. I don't think a position is warranted in this time, and no position is a position. Thanks for watching. Please like and subscribe. Let me know if you find this content helpful and how I can make it more so.